Everyone is dumping Solana. Total value locked has crashed 58% from its peak. Over $7 billion has left the ecosystem. And most crypto YouTubers have moved on to the next narrative. But here's what they are missing. Solana just shipped the biggest consensus upgrade in its history. And the builders are not leaving. They are doubling down. Let me show you the numbers first because they look ugly. Solana's total value locked peaked at around $13.1 billion. Today it sits at approximately $5.5 billion. That is a 58% decline. The easy explanation is that the memecoin cycle ended. Pump.fun cooled off, speculative capital rotated out, and the headline writers moved on. And that explanation is partly correct. A significant portion of Solana's TVL was tied to memecoin trading liquidity. When that dried up, TVL followed. But here is what the surface narrative misses. TVL is a lagging indicator. It tells you what happened, not what is happening. If you only look at TVL, you would have sold Ethereum in 2019 when DeFi TVL was under 1 billion. You would have missed the entire DeFi summer that followed. The question is not why did TVL drop? The question is what are the builders doing while everyone else is leaving? And on Solana, the answer is they are shipping the most ambitious technical upgrade in the network's history. On May 11th, 2026, Solana Labs deployed Alpenglow to testnet. This is not a minor patch. It is a full replacement of Solana's consensus mechanism. Let me explain why that matters without getting lost in the technical weeds. Current Solana uses a system called Tower BFT, which is a modified version of practical Byzantine fault tolerance. BFT consensus has a known scaling problem. As you add more validators, the communication overhead grows. More messages between nodes, more latency, more complexity. Alpenglow eliminates that overhead entirely. It introduces two new components. First, Rotor. This replaces Turbine, the current block propagation protocol. Rotor is designed for faster and more reliable data distribution across the network. Second, Voter. This is a new voting mechanism that reduces the number of messages validators need to exchange to reach consensus. The combined result, if testnet performance holds on mainnet, is sub 200 millisecond finality. That is down from the current approximately 400 milliseconds. I want to be clear about the caveat here. Alpenglow is on testnet only as of today. Mainnet deployment is targeted for Q3 2026. The performance numbers are testnet results and may not fully translate to mainnet conditions. But the direction is significant. Solana is not just maintaining its speed advantage. It is attempting to widen it substantially. TVL dropped, but the builder ecosystem did not. Let me walk through the projects that are still shipping on Solana and why that matters for the recovery thesis. Pyth network is the cross-chain oracle providing over 500 price data feeds. If you use any DeFi protocol that needs real-time pricing data, there is a good chance Pyth is powering it. And Pyth chose to build on Solana because of the speed. Oracles need to update prices faster than traders can arbitrage them. 400 millisecond finality, soon potentially under 200, gives Pyth an edge that Ethereum cannot match. Jupiter is the largest DEX aggregator on Solana by volume. It is processing billions in monthly trading volume. Jupiter is not just a swap interface. It has become the liquidity backbone of Solana DeFi. Marinade Finance handles liquid staking for SOL. Liquid staking was the catalyst for Ethereum's DeFi growth in 2023. Marinade is building the same infrastructure layer for Solana. And then there is Helium. Helium migrated its entire DePIN network to Solana in April 2023. That is over 900,000 hotspots, the largest real-world decentralized physical infrastructure network on any blockchain. Helium did not choose Solana for speculation. It chose Solana because it needed a blockchain that could handle high transaction volume at near zero cost. The point is this. The projects that require Solana's performance characteristics, speed, low cost, and high throughput, they are still here. They are not leaving because TVL dropped. TVL dropped because the tourists left. The infrastructure stayed. Let me give you a quick data-driven comparison. I am not here to start a chain war. I hold ETH, an Ethereum ETF on CBOE Australia, so I have exposure to both ecosystems. Ethereum's total value locked is approximately $60 billion. That is roughly 10 times Solana's current TVL. Ethereum wins on TVL, institutional adoption, and ecosystem breadth. That is not debatable. But look at the performance metrics. Ethereum average block time is approximately 12 seconds. Solana slot time is approximately 400 milliseconds, potentially under 200 with Alpenglow. Ethereum average transaction fee ranges from $1 to $5 depending on congestion. Solana average fee is approximately $0.00025. For applications that need speed and low cost, like Pyth, like Helium, like high-frequency DeFi, Solana has a structural advantage. This is not about which chain is better overall. It is about which chain fits which use case. And for the use cases that are growing fastest, agent infrastructure, depend, real-time oracles, Solana's architecture is purpose-built. In video 11, I laid out a 3-layer crypto portfolio model. Let me show you where Solana fits. Layer 1 is blue-chip holdings, Bitcoin and Ethereum, 60 to 70% of your crypto allocation. These are your conviction positions with the longest time horizons. Layer 2 is mid-cap infrastructure. This includes high-utility protocols that have proven product-market fit, but still have significant growth potential. 20 to 30% allocation. SOL sits in Layer 2. It has a working product, active developers, real applications, and a technical roadmap that could widen its competitive advantages. Layer 3 is high-risk moonshots. 5 to 10% maximum. These are the early-stage bets with asymmetric upside, but real risk of going to zero. A 58% TVL decline on a Layer 2 asset is painful, but it is also the kind of drawdown that creates entry points if your thesis has not changed. My thesis on Solana has not changed. The network still has the fastest finality in production. The fee structure still makes microtransactions viable. And Alpenglow is the most ambitious consensus upgrade any major L1 has attempted. Full disclosure, I hold a small SOL position. I sized it according to the Layer 2 allocation framework. If Alpenglow mainnet delivers on testnet results in Q3, the re-rating case is strong. If testnet results do not hold, the position is sized to absorb that risk. This is not a recommendation. It is a framework for thinking about risk-adjusted exposure to an asset that the market may be mispricing. Everyone is looking at Solana's TVL chart and seeing a crash. I am looking at the builder activity, the technical roadmap, and the use cases that actually require this chain's architecture. That is what they are missing. If you found this analysis useful, subscribe. I cover crypto markets, AI infrastructure, and portfolio strategy every week. I also publish free daily intelligence briefs covering crypto and global equities. Links are in the description and pinned comment. Premium research is available at unchained.gumroad.com. Drop a comment. Is Solana's TVL drop a warning sign or a buying opportunity? This is educational content only, not financial advice. I hold small positions in SOL and EETH as disclosed. AI-assisted visuals and narration used in this video. Thanks for watching. I will see you in the next one.